Welcome to the accounting class. In this session, we're going to explain a little about the setting out of charts of accounts. I will start by reminding you what a chart of accounts is. Whenever a transaction is recorded, then the amounts involved are entered into accounts as a double entry. A complete list of all the accounts used forms the chart of accounts. The chart is not a random or haphazard list. It has a particular structure. This structure is based on the 5 groups of accounts that can be easily recognized. Those accounts that represent what we own or are owed are the assets accounts. Those that represent what we owe to others are the liability accounts. Those that represent our interest in a business are equity accounts. Those that represent monies we receive from business activity are revenue accounts. And finally, those that represent expenses incurred in running the business are expense accounts. Each of these groups can have further subdivisions. Some of these are common to most charts of accounts. Others will depend on the nature of the business. Assets are listed in a particular order, starting with cash accounts. Near the end of the list are items such as equipment and property. There is a logical order to this listing. The ease with which an asset can be turned to cash is referred to as its liquidity. Clearly, cash comes at the top of the list because it already is cash. Accounts receivable is usually placed next because it will yield cash when invoices are paid. Inventory is likely to be easier to sell than property and equipment, so it will be placed next. When a large number of accounts are kept, there has to be an easy way of finding accounts. This was particularly so when each amount was recorded in a ledger, a large book that was originally kept on a ledge, hence the name ledger. These days, software programs provide a system of numbering for accounts, and many of these programs have adopted the same ideas for numbering accounts. This numbering relates to the ordering of digits. The first digit is usually the one that determines the type of account. Asset accounts start with 1, liability accounts with 2, and so on. Since there will be more than one asset account, then we use the second digit as the means of identifying subgroups. The first digit is usually common for software. You will find variations for the subsequent digits, but when looking at the chart as a whole, then it should still be possible to identify a pattern. Since different businesses can differ in the number of accounts that they use in any section, there can't really be a fixed rule regarding numbering all of the accounts. What we can suggest is a possible scheme for the second digit so that with cash it's 1, so all cash accounts would then start with 1-1. Accounts receivables would start with 1 and then use 2 as the second digit, so they would start with 1-2. Inventory would start with 1-3, equipment with 1-4 and premises with 1-5. Now the number of accounts within each of these would determine how many additional digits should be employed in the numbering. Let us suppose that we decide to use 2 further digits. Using these 2 additional digits, this gives us cash accounts that would all fall in the range of 1100 to 1199. Allowing for 100 accounts for cash. The accounts receivables range would be from 1200 to 1299. Inventory accounts from 1300 to 1399, and so on. Liability accounts can also be ordered, and all we need to do is think about the criteria that we might use for this. Liabilities are the amounts we owe. For most of us, we are aware not just of the amounts that we owe, but also when we have to make the payments. When we have to make the payments can be a useful means of grouping our liabilities. In accounting, we usually distinguish on the balance sheet between liabilities that will fall due in the coming year and those that are due beyond that period. Those falling due within the current financial period are called current liabilities. At the end of the year, this term current liabilities relates to the liabilities which will fall due in that coming year. All the other liabilities are then called long-term liabilities because they fall due beyond the current year. We can now start to group the current liabilities according to type. The invoices for inventory and supplies are examples of current liabilities that fall into accounts payable. Many of these will be due for payment within a period of 30 days, though some businesses will secure payment terms up to 90 days and beyond. We usually have accounts payable as the first of our liabilities. Short-term liabilities that have been brought forward from the previous accounting period are usually listed as accrued expenses, and these are also current liabilities. Many of these will fall due within the coming month. Wages due to be paid will be listed as a separate liability. Again, this is a current liability. These days, there are generally a whole series of taxes that can be listed, each tax being listed in a separate account. Apart from sales taxes, there will be all those taxes associated with employment of others. These include Medicare, unemployment, and lots of other things. Sometimes the grouping is not too clear. Where a repayment of a mortgage or a loan is taking place over a number of years, then a part of that liability falls due in the current year, and a part falls due in the period beyond that. It is usual to show these separately in the accounts. The parts due beyond the current financial period are the long-term liabilities. Again, we can use a pattern relating to 4 digits to number the liability accounts. Thus, 2000 to 2099 could be accounts payables. 2100 to 2199 could be accrued expenses. 2200 to 2299 wages payable, and 2300 to 2399 taxes payable. Those ranges for 2500 and beyond could be reserved for long-term liabilities. Equity accounts vary a little according to ownership. On our scheme, they are all going to be in the range of 3000 to 3999. Regardless of the ownership, there will always be a retained earnings account. Sole proprietors will have a capital account that represents their interest in the business, and a withdrawals account for monies removed, which reduces their interest in the business. A partnership will have separate capital and withdrawal accounts for each partner in the business. Corporations will record owner interests as common stock and possibly other types such as preferred stock. The removal of equity through dividends paid will be kept as a separate account. Revenue accounts are usually numbered in the region 4000 to 4999. The grouping of these accounts will depend on the nature of the business operation and where its sales are. A business selling a single product across the nation might choose to record the sales revenues state by state and have accounts for this purpose. A business selling a variety of products may wish to record sales by types of product. A business with service and merchandising revenues will want to record these separately. Expense accounts usually are numbered by commencing with the digit 5. The first to be listed is nearly always cost of goods sold or cost of sales. Obviously, a service industry is not likely to have this account. For very large companies, the digits in the 6000 and 7000 series are also used in recording expenses. Now, very large companies need to keep track of expenses carefully, especially where the company is made up of lots of different departments. When you study managerial accounting, you will learn more of the importance of getting the expense accounts organised. This is because the information that they contain is going to be used for analysis by managerial accountants. However large the company is, you should always be able to spot some patterns in those charts of accounts. For example, the accounts for the various utilities such as gas, electricity, heating, oil and water may all start with the same 2 digits. So here the accounts all belong to a group that we might call utilities. If you're faced with the task of having to construct a chart of accounts, there are some useful rules to guide you. We've talked about the 5 groups of accounts, but here are 2 other things to remember. First of all, set out the chart of accounts as a list before entering them to the computer. And secondly, do leave sufficient space in your numbering system to allow for additional accounts to be added at a later date. This ends our session on charts of accounts. Thank you for watching and for listening.